You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The futures markets can be downright scary. Limit up, limit down. What the heck is RBOB anyway? Are they going to dump a truckload of soybeans on your front lawn if you click the wrong button? Come to think of it, maybe you should just stick to your comfort zone. Or you can break out of it with the Futures Rundown. The Futures Rundown is here to help you make sense of these scary markets. We'll analyze all the top futures trading activity, explore the ins and outs of your favorite products, explain exactly how futures work, and hear from leading experts in the futures markets. We'll even tackle all of your wildest futures trading questions. If it involves futures, then you'll hear about it on the Futures Rundown. The Futures Rundown is brought to you by T4 Futures and Options. Elevate your trading experience with the T4 Futures and Options trading platform. Whether you prefer desktop or mobile applications, T4 delivers low latency and professional-grade functionality for both traders and brokers. Take advantage of theoretical sheets, strategy solver, MBO, advanced charts, and a suite of powerful features to enhance your trading strategy. Visit ctsfutures.com or search for T4 Futures and Options on Google to register and get a free month. And now, it's time to break into the futures markets. It's time for the Futures Rundown.
All right, everybody. That music means we are back. It is Wednesday. It's time to roll out the newest addition to the network. Yes, it is time once again for the Futures Rundown. My name, of course, Mark Longo from theoptionsinsider.com. Reminding you, if you like what you hear, make sure you're A, subscribe to the full network, and B, if you're ready to take that leap to go above and beyond, head on over to the pro, theoptionsinsider.com/pro. Get you not one, but two exclusive shows, a fun time, a great group to hang out with, giveaways, early access to cool stuff, and the oddities coming up this Friday. Should be a banger, if I do say so myself. You want to get in there for that. I'll also get you in right at the end of the month to potentially win the March Pro Trading Crate, so you might want to do just that, listeners. Head on over to the pro, theoptionsinsider.com/pro. Tell them I sent you. I think you're going to like what you find as we look to see who's joining us on the old Futures Rundown this week. I'm pleased to welcome back our old friend, Mr. Brett Friedman, the managing partner over there at Winhall Risk Analytics. Brett, welcome back to the Futures Rundown, sir.
Thank you. Glad to be back.
I ran into your partner in crime, Mr. David Haight from Option Metrics down at FIA. He had a lot of choice things to say about you, sir.
I'm sure he did. An old friend of mine from the market.
Yeah, it was a good time out there down at FIA. It's also a good time here on the show to talk some futures. So let's do it now, listeners. It's time to enter the trading pit.
It's time to break down all the action that's lighting up the futures markets this week. What's limit up and what's crashing and burning? Let's find out. It's time to enter the trading pit.
All right, everybody, let's do it. Let's enter the trading pit, talk about what's lighting up the futures markets this week. And Brett, I have my own thoughts. I have my lists I want to get to and all that fun. But before we get there, you are our guest, sir. So what is catching your eye in the futures markets this week?
I have to say this is one of the quieter weeks, despite, if you read the news, you'd be surprised. But
yeah, when I looked at the most actives for today, I was like, let's run these again to make sure these are right.
yeah. I guess you could start with crude oil, which has recovered somewhat. But there's some, I guess let's start with copper. Copper, we're seeing multi or all-time highs actually in copper, which are kind of interesting. I guess that's the biggest mover that I've seen lately, or consistent mover.
Yes, some all-time highs for copper. We will get there in a second, listeners, when we get to some of the year-to-date bangers out there. Who was it saying it in our chat? Oh, Frank was saying, I bet copper will make it on the future show today. Well, there you go, Frank. You are a prescient fellow. Well, let's get into some of what's lighting it up this week. And again, surprisingly quiet week. Obviously, we kicked off the week in a lot of assets with a broad rally on Monday. Has mitigated somewhat in the equities. We have come back down some of the other way now out there. So interesting stuff to be had. Vol obviously coming in pretty aggressively this week, getting some of that back again this week. But let's go look and see what is lighting it up to the upside and to the downside in the futures market this week. You just mentioned copper, Brett, and also you in the chat, Frank. Copper, interestingly enough, did make a new all-time intraday high just this week. Actually not on our top 5 upside movers for the week, which is kind of interesting. It actually comes in right outside of it at number 6, 2.65%. So it doesn't make our top 5, but year to date is a different conversation. Number 5 this week, listeners, is actually good old RBOB, up 3.18% this week. Coming in at number 4 to the upside, listeners, keeping it in the energy. We got our old pal, the New York Harbor contract, aka heating oil, May, 3.25% this week. Number 3, it's lumber, up 3.83%. Number 2, back to energy. It is crude oil, up 4.08%. That is Brent, by the way, I should point out, the June Brent contract, which means number 1, we're keeping it in crude oil, but going back to our old stalwart of WTI, the May contract this time, up 4.44%. If you're confused, you want a little bit of clarification on Brent versus WTI, we did a whole show about that not too long ago, so go check into the archives, listeners, for a little bit of a deeper dive into crude oil. That said, Brett, we had a lot of energy dominating our top 5 this week with a sprinkling of the softs, aka lumber. Anything catching your eye in that list this week, sir?
Yeah, I do. I mean, I have. You wanted to talk about it later, but we can talk about it now if you wish. There is something interesting about copper that's going on, other than the all-time highs. And interestingly enough, just to give you a shameless plug, I discovered it on your CVOL page, in the CME CVOL, that despite the fact that this thing is making all-time highs, implied volatility of this thing is not really following suit, which is kind of surprising. It's just going more or less sideways since, February. So, volatility is, despite the fact that it's making all-time highs, volatility is not following suit, which is interesting.
Interesting indeed. I wish it was my CVOL page. I don't own that one, but it is a CME page, but we do refer to it quite a bit. Yeah, you're right. It is a useful tool for a lot of futures. I can't take credit, Brett, for inventing CVOL, as much as I wish.
I'll take credit for you if you wish.
Okay, you could deal with the CME's lawyers when they come knocking on my door, sir. All right, okay. To the downside we go, listeners. What's lighting it up to the red this week? If you're short, what are you happy about? Let's find out. Looks like we had a lot of energy in our top 5, our bottom 5 here, listeners. Looks like it's dominated by a lot of ags with a couple of exceptions in there. You'll see what I'm talking about in a second. Number 5 to the downside this week, listeners, we got spring wheat, the May contract, off 3.8%. Number 2, I just talked about vol taking a bit of a drubbing in the equity space earlier this week. That is reflected. And once again, VIX being featured on our upside and downside movers for the week. So a little bit of a volatile time, a vol of vol time, if you will, out there in VIX. If you don't know what any of that stuff means, make sure you're checking out our Volatility Views program. We go deep into all things vol, as the name implies. Maybe sometimes we get a visit from Kenny Loggins on that show as well. It's a good time. Check it out. Number 4, the VIX, like I said, off 4.31%. And I know there's some hardcore folks out there right now who are listening to that. And the hairs on their back of their neck stand up. They bristle. They say, how dare you say percent of a percent? VIX in and of itself is a percent. I say, I get it. I understand. I had to make my peace with that a long time ago. It's the only way to talk about these things. So, yes, number 4, the April VIX off 4.31%. Number 3, back to the ags. The May wheat contract off 4.53%. Sneaking in right above it, it's the good old May hard red winter wheat contract this time, off 4.54%, 0.01% difference there. And the big dog to the downside, going back to energy, a rare energy loser this week, it is nat gas. Nat gas giveth, nat gas taketh away, and right now it is taking away with both hands. The May contract off nearly 10% this week, 9.83%. Brett, anything catching your eye in those downside movers this week?
Natural gas never ceases to amaze me. Coming off because, it's getting warmer out, we're getting out of the season. But it never ceases to amaze me that the natural gas market seems to be always shocked that it gets cold in the winter and warm in the summer. Every single year, someone is shocked by this fact. And I never could quite get why. So.
Yes, it is a highly seasonal product, but you're right. There are still some surprising moves, even within that expected seasonality. Look, Nat Gas did it again this year. You are correct.
True, but that's a sort of a jeopardy category that you have to deal with in natural gas, entitled "Unsurprising Weather Events." So, one thing you did not mention, I have to say, which I didn't realize until I sort of took it for granted. I hadn't been looking at it for quite some time before while I was getting ready for the show, is orange juice is about half of what it was in January, about a 50% down move. And that thing was making new all-time highs, et cetera. And, this is one of the, this is the iconic commodity that everyone always talks about, orange juice futures. And it's about half lower, which is pretty, that's a pretty serious move for anything, for equity, for futures, anything. So that's impressive move.
Ah, yes, the good old FCOJ, made iconic by Trading Places, listeners. So if you're wondering why you know about that contract, it's because of that movie. People always think, they were trading stocks, and nope, they were trading FCOJ. Go check it out, listeners.
Yeah,
a good one.
That and pork bellies are always the two that people ask me.
I lost track when I was on the SIBO, Brett, of how many times a day I heard, turn those machines back on. It was the endless quote. That movie, quotable for days, listeners. But you mentioned good old OJ. That brings us to our year-to-date movers. As Brett mentioned, some assets have already had a banger year or a horrible year, and we're not even done with March yet, listeners. So let's get to some of those year-to-date movers right now. Let's go to the upside first. We'll bury the lead that Brett just said. We'll save it for the end. Let's go to the upside. So far, year-to-date, number 5, listeners, we've got our old pal lumber going back to dead trees. Are they going to be the hottest asset on the planet again like they were during the heart of the pandemic? So far, the answer is no, but it's looking impressive nonetheless. Up 13.56% year to date out there in the May lumber contract. By the way, all of these in our year to date movers and shakers, with the exception of one, are May contracts. So just bear that in mind. Number 4 to the upside this year, silver up nearly 16%, 15.97%. So I know Brett's not a fan, but our good buddy, Mr. Uncle Mike, will be happy to hear that news. Number 3, despite of the fact that nat gas is shedding about 10% so far this week, it's still up 23.19% year to date out there in nat gas, listeners. So as Brett mentioned, people are still surprised that it gets cold in the winter and nat gas goes up. Nat gas right now reflecting that. Of course, come back maybe midsummer might be a different story. Number 2, all of our lattes and espresso fans out there probably not going to be happy with this news. It's coffee up 24.55%. So your morning coffee listeners ain't getting any cheaper anytime soon. And number 1, as Frank pointed out, in our chat there before the show. Year to date, the number one mover is good old high-grade copper, up 29.08%. Again, as Brett was just breaking down, copper making some new all-time highs just this week. Obviously, China, a big driver in the copper story. And, of course, we have tariffs now feeding into that as well. So it's kind of a 1-2 punch on the metals front and leading to a nearly 30% run in copper just this year. Now to the downside. We're going to do a bottom six. You'll see why in a second, listeners. Number 6, going out to dairy, the sole non-May contract on our list. It's the non-fat dry milk, the April contract, off 13.73%. Number 5/4, listeners, is keeping it in dairy. Man, a rough year for dairy so far. It's dry whey. Actually, I take it back. This is a March contract as well. So we got a couple non-May contracts sneaking in there, off 21.79%. Number 4/3, it's cocoa, listeners, off 27.71%. So I guess if you were hoping to have a cheaper candy bar to buy, then perhaps that makes you happy. That then maybe offsets what you're paying for your morning coffee. And then numbers 3 and 2 kind of mushed together because they are the same contract at the end of the day. It's Ether, off just an appalling and astounding 41.6% on the year, listener. So again, we were talking about this on the Crypto Rundown on Monday with our buddy, Mr. Tony Saliba. Everyone was hoping this would be the year ETH would rebound. It would make up some of the ground it lost on Bitcoin and Solana. Instead, it's shedding 41% year to date. That is not great. And then the number one downside mover for the year, listeners, Brett just alluded to it, our old pal from Trading Places, good old orange juice, 44.53%. So I guess, Brett, if folks are upset that their morning coffee is costing a lot more right now, they can make up for it with a half-price OJ, Brett.
Yeah, but on the retail basis, it takes a while for the futures prices to flow in. It'll probably take months before you start seeing it come off in the supermarket on a retail basis, at least. Curiously, for all the upside that coffee and cocoa have had, I don't really, I buy it in the supermarket. I don't see retail prices increasing that much as that the futures would indicate. I was expecting serious price increases on retail coffee, but they haven't really happened. Either they're using old coffee or they're just absorbing them, one or the other, I guess. I don't know.
There you go. A little bit of good news, a little bit of bad news there. You're throwing cold water. I was trying to make the folks happy about the low cost of OJ there, Brett, and you're throwing cold water on it, saying they're not going to see it for some time.
Honestly, I think most of your listeners, whether OJ is $3.50 a half gallon or $4.50 a half gallon, it's not going to make a hell of a lot of difference in their lifestyle, frankly.
Especially when eggs are like $10 for a half dozen, right?
Yeah.
All right, let's keep rolling, listeners. Let's go out to sea. We kind of joked about it at the top of the show. From an activity perspective, you might expect to be hot week, hot day. We started off the week kind of hot, kind of spicy. We had, of course, copper making some new all-time highs. All this talk about tariffs, they're on, they're off, they're back, they're forth. You thought that might drum up a little bit of paper today. You'd be forgiven if you expected that, listeners. And you would be wrong. You would be dead wrong. Our top movers are still pretty hot, but the bottom of our list, I haven't seen it this low in a while. We cut it off at 10, listeners. You get to a top 15 today, you're talking 70,000 contracts. So you're not exactly a banger day out there. It seems almost like if I looked at these numbers, I would say, oh, maybe it's mid-July. It's a quiet period, midsummer. Everyone's off at the beach. But that's what we got. Number 10 today, listeners. Kicking it off in the rates, it is the Ultra T-Bond, the June contract, 216,000 contracts. That's what it costs you to break into our top 10 this week, listeners. Number 9, we got crude oil. The May contract, WTI, 232,000 contracts on the tape. Number 8, 3-month SOFR, you know the deal, all the way out to December, 264,000 contracts there. Number 7, it's the 30-year, the June contract this time, 288,000 contracts on the tape. Number 6, it's the Ultra 10-year, also out to June, 390,000 contracts there. Number 5, we're all the way at number 5, and we can't even break 500,000 contracts, listeners. It's the 2-year note, 452,000. When was the last time you saw the 2-year this quiet. It's been a while. Number 4, it's the NASDAQ E-mini, June as well, 488,000 contracts there. Number 3, the 5-year note, June, once again, in fact, it's June, the rest of our list, listeners, 916,000 contracts on the tape. Number 2, all the way up at number 2, listeners, to break 1 million contracts. That gets us to the old S&P E-mini, 1.08 million contracts to be precise. And the number 1 most active today, still managing to put up 1.33 million contracts. It's the 10-year note. Listeners, Brett, as we joked at the top of the show, not exactly an explosive volume day. Anything catching your eye in that somewhat anemic top 10 most active, sir?
Frankly, not. It's interesting to me that the uncertainty that's emanating from the new administration's tariff policies, off on, is becoming almost an accepted uncertainty in the back of the market. It's no longer in the front of the market, but I suspect it will be coming into the front of the market on April 2nd when the new tariffs are supposed to go into effect, and whether Trump, comes back on those or not, or rewrites them or whatever he's going to do. But, for the time being, they're more or less being accepted by the market as just a background noise more than anything else, even though, frankly, for some of the upside movers that we discussed before, these are mostly tariff-driven trades to the upside, which is a scary trade given the uncertainty surrounding the tariffs themselves. But I suspect the volume will pick up next week when that April 2nd date comes and goes. So don't get too comfortable.
You know what, listeners? We're never comfortable when your questions are involved. Let's get to it now. A little bit of the old futures free-for-all.
Ring the bell. It's time to take on all comers in an epic Q&A battle royale. All questions can enter, but none can leave without an answer. It's time for the Futures Free-for-All.
All right, everybody. A bit of a left field topic this week. Last week we talked about Solana futures. That was a fun one. A lot of you were intrigued by that. Kicking off the week, not exactly blowing the world apart, about 200,000 contracts a day roughly out there, which again is nothing to sneeze at. No options obviously yet, but the futures off to a slow but steady start, I would say, out there, given what we've come to expect from the CME crypto contracts. It'd be nice to see some of that volume tick up a bit, and also, of course, listing the options on there. I know for a lot of you, Solana is the one you like to keep an eye on right now, so we'll be keeping an eye on that as well. But keeping things in that left field frame of mind, let's go beyond Solana futures, listeners. What would you say if I gave you a chance to trade an even more liquid, pun intended, product? Listen, that was the subject of our conversation on our Crypto Rundown program on Monday. Again, a lot of overlap between the Crypto Rundown and, of course, this show, the Futures Rundown. ETH just been annihilated this year. We've got other products sneaking in there. Solana futures on the show last week. And now carrying over into other assets, listeners, our conversation with our good buddy Tony Saliba on Monday was about the prospect of tokenizing other assets that are maybe a little bit less liquid and difficult to trade, but a lot of people are interested in, including the one he's starting with is wine. And you might now say, well, why talk about wine on a future show? But right now, if you really want to, quote unquote, invest in wine, that's pretty much the way you have to go about it. You can obviously buy cases. A lot of people will actually go out and buy wine futures as well. They're not the most liquid things. Anything you have to go buy at, a liquor store is usually not the most liquid of things, pun intended. But still, it is interesting to maybe see this marketplace potentially transition from a quote-unquote futures market that isn't really that liquid right now to something a little bit more viable, something we're more used to trading in a traditional market with liquidity, with an order book, with a bid-offer spread, with futures, and indeed options on them. So that's our question of the week for you folks this week. We said quite simply, would you trade wine if it was available in a liquid, pun intended, tradable form as a tokenized asset? Very simple yes or no. Brett, first off, are you a big wine futures guy? And then B, would you be down for trading a little bit of underlying or maybe even options on a tokenized wine asset?
Well, that is truly from left field. I wasn't expecting this.
That's what makes the show fun, sir.
I know enough about wine that I can order off a menu and impress clients, that's for sure. But I've heard this come and go over the years. Wine, art, Persian rugs. I've heard, that they're going to basically monetize them and turn them into a contract, and off we go to the races. The question is, I would be glad to trade it. To me, it's just a number. To me, the question would be, what's the volume? And the problem is that the spreads are so wide. Like people say, you need to buy Oriental rugs because they're not making them anymore, so they only go one way. Well, I don't know if you've ever tried to sell an Oriental rug, but, you get your face ripped off them versus what you paid for it versus what their bid is. So that would be my question. It's an interesting, the monetization of assets is an interesting topic. It's never really come to fruition as deep as, theoreticians would love it to. So I think it's a good theory, but in practice, probably not.
Yeah, it's a challenging one. As you pointed out on the show on Monday, if you are a wine quote-unquote investor, you have to buy it, you have to store it, a temperature-controlled cellar or something along those lines. If you do want to sell it, you then have to make sure it is recertified to meet whatever investment grade you have to hit. Then, of course, you have to find that bid. It's probably going to be a pretty wide spread, as Brett pointed out. You see that in a lot of these physical assets. Go try sell grandma's gold if you want to see that materialize in real life. Those bids get pretty low if you want to actually hit them. So that's the challenge. That's obviously what they're trying to solve here with this notion of a liquid, tradable wine market out there. Surprisingly, or maybe not surprisingly, we have a lot of savvy folks in our audience, Brett. They tend to agree with you right now. 2/3 are saying they would not trade it, Brett. Only 1/3 said they would trade it. One of our pro members, Mr. Age Del Aquarius, I like his comment. He says, nope, I prefer the old-fashioned way. I hand you dollars, and you hand me a bottle of wine, and then I drink it. So, Brett, it sounds like you're a take-a-delivery kind of guy, just like our pro member here.
I do, and thinking about it a little more, I'm willing to bet you that wine indexes like SPX. So you probably, wine, if it were actually monetized, it would probably correlate pretty well to that, or any sort of commodity that follows economic conditions pretty well. And those are pretty liquid. So you could trade those as a surrogate almost if you really wanted to. But the other question I would have is, how big is the addressable market? Not to use an MBA term, but, that's the question. How many people are really into wine that they're going to make a futures contract a success? I don't know. It seems like it's in the category of not with my money, you don't. So.
Well, our audience agrees with you, Brett. Obviously, if you want to make your voice heard, get over there at Options, and you can do just that, listeners. A little bit of a fun kind of left field topic for a somewhat quiet week in the futures market. That music means we have come to the end of another epic sojourn through the world of futures. Before we go, Mr. Brett, if folks want to check out your musings on all things futures, where should they go? What should they do?
My blogs are available on optionbrett.com or optionmetrics.com.
There you go, listeners. Check them out, optionmetrics.com, the place to go to kick the tires and light the fires. That is going to do it for us on the network today. Back again tomorrow with our usual doubleheader, kicking things off with the option block with our friends over there at SIBO, followed by This Week in Futures Options. Very much the sister program to this one. If you like talking the futures, you should come back to listen to the options. A lot going on there. Who's going to join us for those shows? You got to tune in to find out tomorrow. And then Friday, of course, volatility views. And then we're back one final time for the after party for the network for the week, which is, of course, Options Oddities. Should be a fun one. Check it out over there on the Pro. TheOptionsInsider.com/pro is the place to go to get access to all that fun. Then we're back again next week, all the way through to next Wednesday, another episode of the Futures Rundown. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.